Hi, this is Zach with the US stock highlights here on Share Talk for Friday, the 11th of December. Starting off with Adtx or Adtx Therapeutics, and here you can see that we broke a neckline resistance. We actually had a signal here on a falling wedge break at the end of September, and I suppose the shares at least didn't go down from there. They sort of went sideways and then gradually higher, so that was a win. But the current situation is that we've broken neckline resistance, the initial November peak there at $2.40, and while we're above that, looking for that late September resistance line projection, currently pointing at a target as high as $3.50, hopefully as soon as the end of this month. Onto a stock which is normally, well, you would regard as being rather above the pay grade of the normal smaller companies that we have here, but Disney rising like a tiny small cap. Very, very sharp price action. We had the gap there through the 50-day moving average there at the beginning of November, obviously off the back of vaccine hopes, and gap number 2 now through the, I suppose, the $1.70 area and beyond. We've got one resistance line projection there from August, promising a target as high as $1.86, and then another one from the beginning of October up to $200. $200 probably on the cards, at least while we hold above that uptrend line here at $155 from the end of October. And if you try and tighten up that stop a bit more, up towards 157 would probably be the tightest there, or obviously an end of day close back below the current low, 165. But however way you want to cut it, 180, they're on 186, 187, and then $200 hopefully by the end of the next month there on the cards technically for Disney. Next up is Fat Brands, which is a new name, a memorable name. Here we've had a spike higher for the shares. We've got support there with neckline resistance, which was gapped up through for the end of November. That neckline resistance just below $7. So while we're above $7, notionally in the buying zone and looking for a target as high as $14, which is a September resistance line projection for the shares on the daily chart. Moving along to another bullish contender, this one Adtx, and here we've had a gap through a resistance line after breaking up through the 50-day moving average at the end of November, so that was the start of the recovery. We had a final bear trap there just below $3 as well in October, so that was promising that we could be in a turnaround situation, sort of cup and handle type formation there as well, with the base that we've had since September. And the view at this stage is that while there's no end of day close back below that broken July line at around $4.44, we could head up towards a March resistance line projection as high as $8.50, hopefully as soon as the end of next month. Obviously, pharma stocks on fire at the moment, generally. More in the US actually than in the UK, which is interesting. But here we've got Lexicon Pharma, and we had that gap through the 200-day moving average last month, then tested that late November peak at $2.38 as new support. The view at this stage is that while we're above that neckline resistance at $2.38, we could head up towards a target projected by that October 2019 resistance line at $5.50, hopefully by the end of next month. If you want to have a tighter stop loss, there's a possibility of $2.89 and that July peak as the tighter stop loss there on any retracement that we get. On to the next situation, which is Nant Health, and here we've had a vertical move here. In fact, it's gone up $1 since I sort of got the chart ready, but the view at this stage is that we get an end of day close above that $5.24 peak from back in August. We could have a follow-on move up towards $8 or even $9, in fact, which is that late 2019 resistance line projection, September 2019 resistance line projection at $9, especially while we hold above $5.24 for Nant Health. Going along the scale here and up to Pennsylvania real estate. It's unusual to get a real estate company, but worth taking a look at this situation, I think, on the basis that we've seen the shares gap through the 200-day moving average. That's the black line there. The gap through them, and after like breaking up above through the 50-day line at the middle of November. Nice swing low there at 90 cents, and above 90 cents looking for $2, which is the top of that rising trend channel from the beginning of August. So let's see how that pans out. On to a stock which I think we covered before, Progeny, going well in terms of this falling wedge break, so it's good if you like sort of new situations or situations just got going, and this one has, with the break of that October resistance line at $3.70. Above that, we're looking for the 50-day line around $5.94, hopefully by the end of the month, and then going forward maybe 1 to 2 months as high as that September resistance line projection, currently promising up to $11.50. But at least while we're above $3.50, that sort of area, then the upside or the recovery looks to be very much in play for Progeny. Moving along to a stock which I don't think I've covered before, but here it is making a debut, Snoa Pharmaceuticals. All through these resistance lines that we've had there, the old peak there from the end of July at $12.50, and above that on an end-of-day close basis, we could still have a follow-on rally, hopefully by the end of this month, hitting as high as $18, which is a March resistance line projection. So above $12.50 up to about $18 plus possible there for Snoa Pharma. Just a few to go now, and the first one is Vtvt Therapeutics. Difficult to resist, again, anything in the biotech space. Here we've had the stock actually hit an old resistance line there, the top of the channel from the beginning of last year. That was around $4.75. The game now really just to see how much the retracement will be. The last peaks there around the $3 area. So probably one would say that while there's no end of day close back below $3, we could retest $4.75, hopefully over the next few weeks. A couple of stocks to go now, only. Xers Pharmaceuticals. Here we've had a nice rebound off the 200-day moving average and the floor of the rising trend channel from back in February. That support area around $4, so while we're above that on an end-of-day close basis, 1 to 2 month target here as high as $8. And the only proviso is if you're cautious, maybe you'd wait for an end-of-day close through the 50-day moving average just below $5 at the moment, and that would be your momentum trigger to look for $8. In the meantime, any dips for support towards $4 are regarded as a buying opportunity, with only an end-of-day or weekly close back below that level really delaying the upside scenario. Finishing off with Zdge, which is a stock which is new to this place, and here we've got a rising trend channel, top of the channel heading towards $6.30, and while we're above, at least while we're above the former resistance on the way up, around the $4.30 area, definitely looking for a push higher, old resistance becoming new support, and $6 plus hopefully seen by the end of next month if we remain above $4.30, only back below $4 really delaying or cancelling the bull argument. That's it for me this week. See you next week.